I am with Manju Boraiah from Allspring Global Investments. Manju is the head of systematic fixed income and SMAs at Allspring. It's great to be with you.
It's great to be with you as well, Pat. Thanks for having me.
Yeah, of course. Tell me, I'd love to hear a little bit more about your background and your upbringing. I know growing up you had a love for both art and math.
Yeah,
I'd love to know how that kind of shaped your path into finance,
yeah.
maybe how you use that day to day.
Sure, yeah. I mean, it was a very interesting upbringing. I kind of grew up learning a lot of languages, and then I had a fascination for art and mathematics at the same time. Kind of fast forward to today, I kind of basically evolved myself into more of a problem solver. And the way I kind of think about art and mathematics or even technology is I see them as means to an end. So I've kind of used those, experiences or tools as way to understand complexity around us and solve problems. So that's really kind of how my life has evolved. Even though I ended up in finance, I started off in computer graphics, made my way through computer science, and now I'm helping hopefully solve problems for the wealth ecosystem.
Yeah.
Yeah.
What are the types of problems you most enjoy solving with those kind of two sides of the brain?
Yeah, so something that involves both, not just the analytical piece, but also human interaction, right? So most problems are, human problems, right? So it's problems that we want to solve on a daily basis. For me, it's really how do you actually take analytical solutions but apply it to, ultimately solving problems for human beings. So in the wealth ecosystem that I'm currently involved in, it boils down to how do you make life easier for financial advisors, embrace solutions, especially custom solutions to make their end clients feel better, meet their objectives, be it financial or value-based. That's really kind of the core focus right now for me at Allspring.
Gotcha.
Yeah.
I'd love to hear more about Allspring. Obviously, it's a behemoth,
Yeah.
but I'd love to hear more just about the DNA of the firm, the heritage, and
Right.
kind of how you guys approach investing as a firm.
Yeah. And so Allspring, we've been on a fascinating journey. We became private about 3 years ago. And we've been, essentially evolving the firm ever since. We started actually money management in 1930s, believe it or not. So we have a long DNA, a long history of managing assets and solving problems for clients. Currently we are on the track to essentially evolve ourselves as the best asset manager or the best of breed asset manager out there. And the way we are approaching this is by, really understanding how do you bring the best of breed on the fundamental investing and systematic investing, blending the two together to essentially solve custom problems for clients. We're also looking at on the wealth side, we're looking at what are the best vehicles to do that, right? Retail SMAs and active ETFs are essentially the two fastest growing verticals out there. So we've been focused on growing that book of business. Also understanding how can we actually have a better technology and operational platform to help solve, solutions for clients as we go forward.
Yeah,
Yeah.
I'd love to learn more about. I mean, obviously, you're a fixed income expert.
Yeah.
I'd love to understand how you're thinking about the market these days. If there's any
Yeah.
pockets of value that you see in fixed income.
Yeah, so we're going through a very interesting journey, to say the least, right? So if you think about the macro risks that we currently face, the one risk that I do see is stagflation. Is that's a real risk. Growth is definitely slowing. Labor markets are definitely slowing based on the numbers that we've seen over the last 3 months, and inflation is still persistent, right? So we have seen the service side of inflation still being very sticky. Given that persistent inflation is a risk and then growth in labor markets are slowing, markets are pricing in close to 3 cuts this year. Now, the question is, whether that's going to work out, right? So that really boils down to how the Fed is going to look at the inflation equation and the growth equation or the labor market equation and where they're going to tilt towards, right? So that's really what investors are wrestling with right now. Markets have priced in 3 cuts. On the Allspring side, we've actually kind of basically approached investing in fixed income based on kind of three principles, I would say, this year. One is diversified duration, right? If you're focused on essentially looking at parts of the curve where you still get better value, especially the intermediate part of the curve, like 5 to 15 years is a good horizon to look at. If you look at the nominal rates and the real rates, they're still attractive in that part of the curve. So not just focusing on the intermediate part of the curve, but also diversify duration more globally, right? So look at developed market rates and have a more diversified duration. The second thing is like focus on income, right? As a fixed income investor, income is the key, tenant, right? So, can you actually maximize your income in the portfolio? And then the third thing is really how do you actually kind of ride this, stagflation risk, right? So be very prudent in terms of where you're actually making bets, be on the, shorter duration or the intermediate duration, just be cognizant of kind of the risks that are lingering out there. So those are kind of the fundamental guiding principles that we're seeing and we're using and helping clients to navigate the risks out there.
Gotcha.
Just gonna put this down for a second.
Just to drill down into it, either more niche piece of fixed income. I read as I was prepping for the interview that there's over 1 million uni bond issues
Right.
out there.
Yeah.
How do you navigate that sheer size and scale, and kind of how do you, on a modeling perspective, build that into the portfolios and strategies?
Yeah, so the muni markets are very fascinating. I mean, there are 1 million bonds outstanding out there. And if you look at the number of issuers in the markets, they're about close to 60,000. And the broadest benchmark in the muni space only captures a fraction of those issuers and bonds. So the challenge is if you're building portfolios in the muni space, how do you build a diversified portfolio that brings the best of value for clients? So we use a more blended approach, Pat. So we look at fundamental ratings for issuers and then use a systematic approach to build portfolios. The benefit of doing that is you can focus on eliminating the left tail. So in fixed income, it's all about avoiding the bad stuff and focusing on good and average stuff, right? So that's really how our fundamental ratings help. So there is a fundamental research team that helps like basically look at all the issuers out there, a decent chunk of them, and actually rate them on a scale of 1 to 5. So we start with the premise that we are looking at good, validated issuers, and then use a systematic framework to pick about 20 to 50 bonds to ultimately build a diversified portfolio for clients. So having that blended approach really helps, approach the vast data set out there or the vast issuers and picking the best and the brightest in terms of bonds for the investors.
Got it. So it's a little bit of a bottoms up fundamental analysis, meaning a top down or systematic.
Exactly, right. And then doing it consistently across thousands of accounts, because we manage close to a few thousand accounts in the muni space for retail investors. So having this disciplined approach and applying it consistently across these thousands of accounts really helps us to deliver value consistently to all clients.
Yeah. I'd love to learn more about that structure, if the SMA structure is what you're referring to, and kind of how that works.
Yeah.
At Allspring, and more broadly, how advisors should be thinking about SMAs if they're either using them but not for all clients, or how they should build them into what they're doing.
Yeah, definitely. So SMAs, the benefit of SMAs is that they, use the whole individual CUSIPs, either bonds or equities or a combination of the two, right? The core benefit is obviously you can customize portfolios to the objectives. In the fixed income space, it could be based on the duration that you're interested in or the income targets. On the equity space, again, it could be based on, financial objectives like dividend yield, or it could be based on avoiding certain sectors or, issuers, right? So building a custom portfolio that ultimately meets your financial objectives and then also delivering, maximizing your after-tax returns, right? That's where the concept of loss harvesting comes into play. In SMAs, because you're holding individual CUSIPs, if there is a CUSIP that is actually experiencing a loss or drawdown, you can sell out of that name and then buy a name that's commensurate in risk, which means that you're essentially locking in those losses, but you're still having to deploy the same amount of risk. So the benefit is over a period of time, the losses accumulate, and you can then use that to offset gains in the same portfolio or some other part of your portfolio, overall portfolio. And that's really how you can add what we call as tax alpha, right? So that's the core benefit of SMA structure, right? Which you can't really do in a mutual fund or an ETF. So that's the core benefit. And I think that's the reason you've seen tremendous growth in this area and investors embracing SMAs as a go-to vehicle.
Yeah.
Yeah.
I think it's definitely true that individual investors and then even some advisors are guilty of looking at a headline yield, perhaps not really thinking about, how can I structure this from a post-tax perspective that's going to maximize returns. So that makes a
Absolutely.
lot of sense.
Yeah. And then if you're also an advisor with clients who have concentrated stock position or, legacy holdings, and they want to essentially transition that into a more diversified portfolio in a tax efficient way, again, SMAs play a pretty critical role there as well.
Yeah.
Yeah.
I'd love to hear a little bit about Remy,
Sure.
Allspring's
Yeah.
proprietary platform,
Yeah.
and how that works, and how advisors can use it.
Yeah, so it's been a fascinating journey for us. So we launched Remy, we built and launched Remy a few years ago, and we've been essentially expanding the offering on Remy ever since then. The key unique proposition for Remy is that it's a multi-asset custom SMA platform, which means that you can build and deliver SMAs across both fixed income and equities, active and passive strategies on the same platform. So we're pretty unique in the industry from that perspective. So if you're an advisor who's looking to build a tax-efficient asset allocation model where you can add sleeves that are tax-efficient, then Remy is a great platform for you to actually look at the different options. So we offer muni ladders, direct indexing on the equity front, but also active strategies on fixed income and equities. So for an advisor, it's a one-stop solution. So it's been a fascinating journey, and we've been evolving the platform ever since we started. And our vision is to really make this a one-stop solution for advisors who are looking for tax-efficient solutions.
Yeah.
Yeah.
I've met a lot of different folks at different Allspring events, and it seems like the apparatus and investment going into Remy is really significant. So I'm sure very valuable for advisors.
Definitely. Yeah.
Okay, Manju, it was really lovely to meet for the second year in a row at Future Proof. I'd encourage all advisors to go check out Allspring Global Investments. And Manju, thanks again.
Thanks a lot, Pat. Thanks for having me.